Hello, welcome. So today I'm going to talk about the entries of SMC and ACT, and mostly I'm going to talk about order block and fair value gap. So it's different from what everyone knows about, but I'm going to teach you what I know about order blocks and fair value gap. So starting with order blocks. Order block is just uh, is the candle where these smart money traders or ICT traders, they say like it's a candle with a lot of liquidity. Okay. So when we have a break of structure, other people define order blocks like a last selling candle. For example, here, the last selling candle before this move here. Or other people, they say the last bearish candle in terms of last bullish candle in terms of what? In terms of bullish move like this, the last bullish candle like this. So that is an order block, okay? But I have a different definition on order block. Order block is a candle that produces a fair value gap before the move in the break of structure. For example, when you have a break of structure, that candle, any candle that produces or left a fair value gap between before having a break of structure, that candle is an order block. That's the way I define an order block. So any candle that left an fair value gap or an imbalance, that's the one you mark uh, as an order block. So when you have something like this, so this is a fair value gap, right? So the candle here, this is one, this is what I call an order block. Okay, so sometimes you may find it is a bullish candle, sometimes it can be a bearish candle. So we'll see with the example. So let me show you some of the examples here. So you see, we had a break of structure here, right? That's a major break. But inside here, we had a lot of candles which produces a fair value gap. So we had this one, we had this one here, we had this one here. So which one has high probability of being activated? The middle one. Why? Because it aligns with the zone. And we see we have this candle. You know what that candle is in the zone flip entries, right? So definitely that was an order block entry, and that we get that entry moving up, right? That's a first example. So let's see another one. We get this one. Okay. So this gap below here, we had our break of structure above, although it was not a clean break. It was a week-to-week break. And you know, when we have a week-to-week, we either have a retracement or a complete reversal. So in this case, we had a complete, the retracement move, right? So look at this. This order block was already tested, and we had another one. So look at this one. This is the last candle which produces this gap here. That's an order block, and we see price making the move from there, right? So sometimes you may find order block may not be, may not work. For example, see this one. This is our break of structure, and we have a candle, this one that produces the order block. Why did I mark this one and instead of this one? Because this candle here is inside this one. It didn't break below or above of the previous candle. Let me show you in the next example. See this one? I marked this one, the red candle here, because this black candle is inside this red candle. It did not break any high or low of this previous candle. So see, this is our order block. The market tested that, and you can see it left a fair value gap. So the market always balance the market. When we have an imbalance, the market will try to balance it. And I'll show you on fair value gap how to trade them. This is the next example. You can see we have this candle as one order block. This candle is inside this candle, so we mark this one. And you see the market after the breakout structure, the market tested again and move. See that? Even this one was an order block. The market tested, it failed to cross above, and that's why we have that retracement move. Simple like that, you find yourself trading order blocks. Another one, you see that candle leaving the gap, market rebalance it into the order block, mitigated it, and then we had that sell move. So that is about fair value gap. But in the terms of that was order block. But in terms of fair value gap, they're simple. I don't use fair value gap for entries. That is well said. Fair value gap, I don't use it for entries. I use it as a POI, the point of interest, where I wait for the market to come in, react in the fair value gap, and then gives me a what? An entry in the lower time frame. So I always use this in the daily time frame. If you see a daily time frame fair value gap, and then the market tests, for example, this is our gap. If the market tests that gap, you go to the coordinated time frame. For example, if you are in the daily, you go to the 1 hour to observe a change of character with inside formation, and that's what you're going to trade. Simple like that. I'll show you some of the examples here. So this is daily GBP JPY, and you can see we had our gap. Market tried to retest to react inside the gap. So after the reaction, what you need to do is to go to the coordinated time frame. And if you go to the coordinated time frame, what do you see? Market changing. This was the gap, the daily gap. Market changed the character, and we have a structure for us to trade. That's a simple way of trading this. You see, reaction to the fair value gap in the daily. You go to the 1 hour, change of character, inside formation, boom. Reaction in the daily fair value gap, change of character with inside formation, boom. See that? That's how I do in the fair value gap. So I don't use fair value gap as entry. I use it as a point of interest. In case you have any question, you will pop out on my WhatsApp, and I'll try to answer. Thank you very much. See you next time.